Welcome to another stage analysis video. It's Sunday the 30th of March 2025. Been away for the last week, just had a short break in Florence, so just getting back into the markets, and looks like it's been an interesting week while I've been away. So we're going to start off with a look at what's been going on with the major indexes before getting into the rest of the video. So starting with the S&P 500 here, as you can see in the last 3 weeks, it's been attempting to make a stage 4 breakdown attempt. So this is the weekly chart. You can see it's just starting to break through some longer term levels. We had some shorter term levels broken a while back, so about 4 weeks ago, and started to move through the 40-week moving average and the 200-day moving average, and then broke them a bit more convincingly, but we had a little bit of a tail on that one. Started to push back up again and rolled back over at the test of the 200-day moving average again this week, so closing with its lowest close of the last 5 or 6 months or so now. So you can see from the percentage of stocks above the 50-day, 150-day and 200-day moving average in the NYSE and NASDAQ. So this isn't just the S&P 500, this is around 5,000 or so stocks. It's down to around the 30% level at the moment, so it's broken into the lower zone to anything below 40%. So it's now into a technically weak position with more than 2/3 of stocks below their short, medium and long-term moving averages. So potentially an attempt to move into early stage 4 here. If we look back into 2023, you can see the last attempt after the brief move into stage 2, and it rolled over back in October. It managed to spring quite convincingly, and that was the start of a major stage 2 continuation, which has gone on for the last year and a half now. So this period here over the last 5 months turned into a little bit of a double topping pattern, but until around 4 weeks ago, it wasn't clear whether this was stage 3 or just a continuation in stage 2. So you'll find this a lot with stage 3 type patterns, if that you often don't know that it is stage 3 until right at the last minute, and all you know that it is a distributional base structure and it's starting to weaken in the latter part of stage 2. So if you were still looking at the chart through this area, for example, so everything before that, this is still technically in late stage 2 at that point. So until it starts hitting this point, it's not considered stage 3, and then it very quickly moved into stage 4. But now, obviously, with hindsight, you can now look at that big pattern there and say, okay, that was stage 3. But when you're doing it in real time, all you know is that it's in late stage 2 and it's weakening, and often you don't get the big nice pattern that you see in the book where we've got the big rollover and down. So you don't get the big choppy sideways pattern going through there. A lot of the time it's just running up and comes off very quickly and starts to break into the stage 4. So could still rebound from here. We could still easily get back into the broader structure and move back into stage 3 again. But at the moment, like with many of the other indexes, this is attempting to move down into stage 4. Doesn't mean it will succeed, but it certainly is attempting. And we are seeing, if you come to the percentages of stocks in stage 4, for example, here, so come to the stages summary. So this is broken down into the various market cap ranges. So we've got the market total at the bottom here, we've got the core total, which is everything above 300 million market cap. So mega caps at the top here is the only area that's still got more stocks in stage 2 than it does in stage 4. Every other market cap, large cap, mid cap, small caps, there's more in stage 4 than there are in stage 2 now, and that has been a trend that we've seen develop throughout the last few months. It started off in the lower cap stocks as they started to move up, and we've seen this continue to trend and gradually knock down each bit. So small caps, then mid caps, then large caps. So we're just waiting for the mega caps to roll over, and at that point the market would truly be in a stage 4 decline. But until they do, it's still very much on the borderline at the moment. So coming back to the ETF summary here, you can see all of the major indexes have dropped into stage 4 currently, and from the sector perspective, we've also got most in stage 3 still, with a few dropping off into stage 4, so including on an equal weighted basis there. So coming back into the individual charts, if we look at the S&P 500 weekly chart with the counter channels on. So these are the +3 counter channels. So each line here is that's +1, +2, +3. So in the bottom, -1, -2, and -3. So generally, when you're above the +1, it tends to be in an uptrend. For example, with brief periods of dropping below that. So you can see at the moment we've dropped below the -1 ATR level here. So we're now technically in a downtrend at this point compared to obviously the last year or so when we've been above the +1 ATR level for the vast majority of the time. So you can see that gradually weakening off there and starting to drop off. So short-term downtrend, percentage of stocks above their 200-day moving average dropping to 48.2% at the moment. So you can see that the change of character from the last year, 2024, the majority of stocks in the S&P 500 were above their 200-day moving average, more than 2/3 at that point. And so you can see how that has changed since the start of the year, the change in character we've seen as the market has gradually deteriorated and attempting to move lower into early stage 4. But as we said, it's still very much a borderline case. If you look at the daily chart here, we've got a short-term selling climax or mag rally. So this could turn into a secondary test. So at this point here, we've got the beginnings of a potential structure. See lots of people expecting it just to drop off a cliff straight down, ABC type correction. But we could end up in a sideways range here. This could continue to chop around the 200-day moving average and may yet recover. We could even see a double bottom bounce here. So you never know what you're going to get, but all we know at the moment is we've got obviously a short-term low, short-term high, and a defined range that we're trading within at the moment. So percentage of stocks above their 20-day moving average at the moment at 36.6. So this could quite easily get a lot weaker in the short term. So it's nowhere near oversold on a short-term basis there. Nasdaq, very, very similar position that we're seeing to the S&P 500, also attempting to break down into early stage 4 here. So you can see flattening 40-week moving average there, flattening 30-week moving average. The 10-week is getting closer to crossing down. 44% of stocks above their 200-day moving average. So again, we've shifted from last year, the majority, you can see we're above the 60% level. So that was around 2/3 or so above the 200-day moving average. You can see the slight change of behavior that we've seen over the last month or so here as this has drifted off. We're starting to see more and more stocks in the Nasdaq 100 breaking down. So again, very similar position that we see with the S&P 500. Short-term selling climax or mag rally. So could potentially go sideways in this range, but if we start breaking this convincingly, then obviously ABC type correction could be on the cards then. But at the moment, in a defined structure, so we need to see if there's any support at the lower end of this structure here, and if it does rebound, we've got a significant bar in the near term here, so around the midway point of that is often where rebounds will fail if that is the case. So Russell 2000 much weaker than the mega caps. You can see 5th week now in stage 4, so it broke down relatively convincingly. Big significant bar through here on the 2nd week, so attempted to rebound and rolled over. You can see a long way below its 10-week moving average at the moment, so only 27.33% of stocks in the Russell 2000 above their 200-day moving average at the moment. So after a long stage 2 advance there, it's sideways into stage 3 and is now rolling in stage 4 at the moment, but could easily rebound through here and remain in stage 4 for a while. It's got a lot to do to get back up to that level at the moment. So again, on the daily chart, similar kind of pattern in the near term, selling climax or mag rally. So whether it breaks this structure or not will give us some key information in the short term. Moving on, let's look at what the mega caps have been doing. So I didn't want to do